about 3 ways for you to get into the stock market as a beginner, man. So look, first off, and one of my favorite ways is the way of ETFs, man. So ETFs to simply stand for exchange traded funds. So look, okay, let's think of it as you go into a store and you walk in the store, you're hungry, you don't really know what you want to get, you got an idea. So you go into the aisle, let's go into the crisps aisle. You go get some crisps. You want to get some savory snacks, you want to get some crackers, you want to get some popcorn. They've got all different snacks in there. You're not too sure what you want to get exactly. You just know that you're hungry, you want to get something. So an ETF is simply you going into a specific aisle that has similar products and you just grab one of every product, put it in your basket, you take it to the checkout, you pay that one price for it, okay? So think of an ETF in that way, all right? So a great ETF, let's say, you're feeling the technology sector. It's running up that year. So you're thinking, okay, I want to get me some tech stocks. A great ETF to start with is EQQQ, which is just 100 of the best tech stocks in the market. And like I said, you can take that, pay one price for it, and now you've got that spread of risk. You don't have to have all the individual companies, you've got them all together collectively. And no matter how much money you put in there, whether it's £100 or £1,000, each company in that ETF will have a certain percentage which that fund is allocated to. So that percentage will represent and fractionalize the amount of money you put in there. So let's say, for example, EQQ, you've got top companies in there like Apple, you'll have Microsoft in there, you'll have some, Nvidia in there, you'll have companies like AMD, things like that in there. And your money, that £1,000 will be split depending on how much percentage if they make up in the ETF. All right. So it's a great way to get in the game as a beginner because, like I said, you get exposed for a low barrier of entry, a low price, and you get great companies in your portfolio. Okay. So that's a great way to start with ETFs. Now, one drawback with ETFs, not going to say a drawback, but something you need to be mindful of is something called an expense ratio. Now, every ETF out there will have a different expense ratio. So essentially, an expense ratio is just what you will pay the privilege to own that fund of companies. Okay. So you don't want to ever be paying over the odds for businesses in an ETF because that will affect our gains essentially and that will affect our returns. And as we know, the stock market is all about returns, return on capital. Okay. So expense ratio is something we've got to pay attention to when we're getting into the game. Number two way of getting in the game, and one of my favorite ways as a beginner, is something called REITs. So that stands for Real Estate Investment Trust. Okay, that's right. You can buy real estate on the stock market, man, and get in the game because they offer us big dividends. All right, I like to call these cash cows. All right, so REITs are a great way to get in the game because again it allows us exposure into an asset class of real estate which is traditionally a lot harder to get into. And the great thing, the bonus thing about REITs is that they have to pay us as investors 90% of all profits that they produce in cold hard cash, whether that be every month or every quarter. They'll give you that payout. And that's the great thing about REITs, man. So the one thing on the flip side, though, is that you shouldn't expect high stock price returns in REITs, typically just because that the growth isn't there. They're more stable, they're slower moving, because they're giving away all that profit in cash to investors. Little or none left is usually readily available to grow the business. So it's a trade-off. You got to understand that you won't usually get the high stock returns, but you get those big dividends every month, every quarter on your money being invested in there, man. So that's a great way. So give you an example of some REITs. So they come in all shapes and sizes. You can get them from storage facilities, to apartment stores. You can get them all different shapes and sizes. And for me, the ones that resonate with me, I'm from Coventry originally. Anyone who's from the West Midlands will know the, the Central Six. So Central Six is a department hub that houses a bunch of businesses. So what businesses will have to do, they will have to pay the rent to Central Six, to the REIT company, which is AEW UK, And like I said, those profits that are generated will pay us in cold hard cash every month. And another great one in the UK, everyone who's familiar with, is Big Yellow Storage. Storage facilities are a great way to get exposure to REITs as well. They are also REITs. And if you want to really get technical, then a great business as well to get into if you want real estate exposure is McDonald's. McDonald's is actually a real estate business which happened to sell burgers and fries. McDonald's is one of the single largest land and real estate owners in the world. So this is why you will never see a McDonald's in an airport. And the reason is because they can't own the real estate that the McDonald's sits on. So any location McDonald's has, it owns the real estate beneath it. So another great way, and the third way is probably my favorite way, and again, it's super easy way for you to get in this game of investing, is to simply just buy the market. So you can buy the S&P 500, which simply is just the 500 best businesses on the stock market, man. And I'll be honest, one of the hardest things you can do in this world is build $1 billion business, but easiest thing you can do is just invest in one. And what investing essentially is you giving your hard-earned cash to these CEOs by investing in their businesses and them going to work for you to bring back more money. That's all investing is, man. And it's a great way and a quick way to get in the game again for a low price, and you get that instant exposure to a bunch of great businesses. And another great thing about the S&P 500 is that even if a business is just tripping, it's messing about and it's not performing, the fund will just throw it out and replace it with a better one without you doing anything. So I like to call that you get to earn and learn at the same time. So your money's working in the background for you, automated. You haven't got to do nothing for it. And at the same time, you're just learning about the market, getting better equipped and building your financial fortitude to go forward and make better, great investment choices. Now, on a little part two to that is if you're feeling a little bit more riskier and you got a few more chips on the table, what I would say is that start building a position in the top 10 companies in the world that are currently performing. That's a great way also to get further growth and exposure with your hard-earned money. So top companies out there, let's talk about a few. Let's take, your Apples, your Microsoft, you've got Amazon, you've got Meta, you've got Nvidia. So people like Amazon, we know they sell everything from A to Z. And they have a competitive advantage in any sector or industry that they go in. They become the instant bully. Amazon is at any given time number one, number two when it comes to online retail e-commerce sales. And the funny thing is that isn't what Amazon does best. They do that as a side hustle. They sell us goods and packages online as their hobby. Their true moneymaker is their web service, their Amazon AWS, which is their data storage. That's how they really make their money, man. So the key, what I'm trying to tell you is investing in businesses that have undeniable competitive advantages. Let's take Meta. Again, Facebook, they have the most amount of users across their social media infrastructure. They can't be competed with. And if you multiply that with Mark Zuckerberg having no debt in the business, that's undefeatable, man. That's a moat in itself. That's an unpenetrable advantage which another business cannot replicate. And finally, let's take Nvidia. It's been the hot stock the past 2 years. And Nvidia, they have a moat built in because they have the only microchip available that essentially the world needs and the world be using. Not just gaming, not just technology. I'm talking everything will need their chips. So that alone is a deniable advantage which another business cannot replicate. So this is a great way to up your investing level, even as a beginner, or as you get your feet wet and you get more comfortable, is start investing in these single businesses that are truly killing the game, man. So look, let's recap, man. First off, we talked about ETFs, man. So ETFs, just simply remember them as you're buying a basket of stocks for one price in the same sector, and they do similar things, okay? Number two, we spoke about REITs. So REITs give us those big returns in the form of dividends. They pay us 90% of all profits in cold hard cash, man. But remember, on the flip side, we won't usually see massive stock price returns, okay? And lastly, man, my favorite and my personal one I use is just simply buying the market, man. So things like the S&P 500, I personally use it as my savings account because I know on average it's going to return me way more than any bank account out there. So look, man, we went through a few things today. Hope you got some value. Those are your three easy, simple ways to get into the stock market as a beginner, man. It's been your boy Ash Assets. It's been a pleasure, man. I'll see you in the next one.